Arkansas Business Journal Report. I'm Paul Gatling, joined today by Stephen Plaisance. He is the president and CEO of the very large and very successful mortgage division of Arvest Bank. Stephen, good to see you.
Thank you, Paul. Thanks for having me.
Thanks for being here. Let's talk some mortgage business. We're in an era of historically low rates trending down to about 3.5 now for 30-year, and I think the 15-year fixed is even lower, closer to 3, which is not far from being free at this point. You guys are giving away some free money. Is that stimulating consumers' interest in buying homes, or is it more spurring interest in refinancing mortgage?
That's a good question. 3 years ago, we thought you'll never see rates slow again, and here we are once again. And coming into this last drop in rates, we were doing probably about 60% to 65% purchase money, but now that has shifted more even, and if not, maybe shifted a little bit more towards refinances. But the good news is our purchase activity year over year continues to outpace the prior years. So to answer your question, people are buying homes, but now there's also an opportunity for folks to look at another refi.
What are the opportunities going to be if we keep hearing this word that we're starting to hear a lot more, and that's recession, starting to hear that on a daily basis? Where could the bottom be for these interest rates? Where do you see them going in the next maybe 2 to 3 months?
Well, that's obviously the $64,000 question, is how low can rates go? And certainly, generally with interest rates for mortgage rates, bad news in the economy drives those rates down. So it's a little bit of a love-hate relationship. We certainly don't want the economy to go into a recession, but if it does, that's where the Fed will generally jump in and try to help stimulate it by keeping borrowing rates low. I think our concerns, if we do go into a recession, it will surround folks' consumer confidence. And the consumer confidence as it relates to people wanting to look to move or buy homes or build homes, and also consequently banks and other funding sources to loan out that money as well.
Right. I mentioned the size and success of Arvest's mortgage division. 17 straight years now, originating more than $1 billion in mortgage loans. That milestone was reached in June, which is the midway point of the year, obviously. Are we maybe approaching $2 billion in mortgages by the end of the year? I know that would probably be a first for the company, right?
Well, our record year was 2012, actually. We did just under $2.6 billion, okay. And we have an outside shot at reaching that. And more importantly, it gives us a chance to help probably 12 to 14,000 families with their home financing. So that's the best part of it all.
What's been driving the business this year? Obviously another successful year. What's been behind that?
Arvest, we continue to grow our brand. We continue to grow it geographically. We grow it in terms of digital presence, marketing. I think you're really seeing Arvest continue to grow in its technology and digital solutions to its customers. So along with that, I think our exposure is growing. And again, as our mortgage customer base grows, that helps really give us an opportunity to gain that business back and repeat business and good referrals.
How are you growing that customer base? I guess how is your business changing? How will the business change over the next 2 to 3 years? And just what are some things you're doing to kind of create that change or respond to that change?
Much of it is centered around what customers want. Customers are demanding more convenience. They're demanding mobile solutions, online solutions, and everyone wants it fast and easy and convenient when they want it. So no longer do customers necessarily want to come in the bank branch and schedule an appointment, but they want to start their application from their couch or their dining room table. So Arvest, we're really spending a lot of time at understanding customers' demands and their needs and developing solutions, many of them digital, around being able to help them conduct any transaction they want to do with us.
Well, you've been understanding customers now for 30 years. It was 30 years ago this summer, in fact, that you joined Arvest Bank and joined the business. So you're just a few weeks away from starting your senior year at Rogers High School in 1989, took a job as a part-time teller. I'll let you take it from there. How have you stayed with Arvest Bank for 30 years?
Well, I told a group this morning, in July '89, I thought that'd be a couple-month gig, and they'll have to drag me out now. I mean, Arvest has been a great company in terms of presenting opportunities to lots of folks, and there are many other teammates like me that have had long careers and started in high school or college. But really, it's been a tremendous place. It's been a company that has been on certainly a growth trajectory for many years, and most of all, it's a company that has really been good to its associates, and that's why there are people like me and many others that have been here 30 years, 40 years, and longer.
Right. You mentioned a lot of good friends. I know Dick Trammell has been a good mentor for you and a good friend for you. And speaking of longevity of the long careers, you just retired last December after 43 years. Have you sought his advice on how you can reach that plateau, or are you going to let him carry that flag of longevity with the bank?
Well, you never know, but I was certainly, Arvest had a nice send-off for Mr. Trammell, and if you were to see him, he'll certainly be one to say he helped raise me, like he probably helped raise a lot of kids in Rogers, but just wonderful teammate and ambassador for Arvest as well as the community for many, many years.
Yeah, we saw Dick at our 40 under 40 luncheon recently, and he has attended all 23 of our 40 under 40 luncheons, so it was always great to see him there and great to visit with him. Kind of a last question for you, kind of a two-parter, big picture takeaway. What is one thing that is strong in the mortgage industry right now that you feel good about, and what is one thing that is maybe concerning in the mortgage industry right now?
Well, I think one thing that's strong is that when we came out of the mortgage crisis, the mortgage meltdown, whatever you want to call it, there were certainly many new regulations put in place, and many of those were honestly to help protect consumers and buyers. Because when we make a mortgage loan, we want to keep that. We want that customer to be able to stay in that home. We don't want them to go into default. We want them to make sure that they understand the transaction they're getting into, understanding what it means to own a home beyond the house payment, but understanding financial management. So I think the rules today for mortgage make a lot more sense, and that certainly that's a good thing in the long run, even though it has caused some consternation in the market. Second question.
The tough one. The tough one. What is concerning about the mortgage business right now?
What's concerning about the mortgage business right now would be that right now overall loans are performing very well. Delinquencies are at really, really low levels, and so as I mentioned, these new rules, they have not been stress tested yet. So if we do run into another recession, we'll find out how they hold up. Probably another thing to add to that is if you ask any realtor, I think, or anyone involved in housing, there's an inventory issue in a lot of markets nationwide. And again, that's also related towards towards people being able to move up or move sideways or even move down. There's just not the inventory of homes available that you had in the early 2000s.
Right, the low interest rates don't do much good with a low inventory to go with them. All right, that's good stuff with Stephen Plaisance. He is the president and CEO of Arvest Mortgage Company. Congratulations on 30 years, and here's to however many years left that you want to do this with Arvest Bank. Congratulations.
Thanks, Paul. I appreciate you having me.
All right, very good. As always, we appreciate you tuning in. I'm Paul Gatling. We'll see you next time.